Welcome back to the ETF Inspector. It's currently Saturday, September 27th, about 9:30 at night, but this video will be premiering Sunday morning, so just getting it out of the way so I don't have to get up so early. But this is our weekly video where we take a look at LFGY, YieldMax's crypto industry and option income ETF. We look at the week look ahead to see how our options are looking as far as where our calls are sold and how far up our stocks can move before they are capped. And we take a look at the past week's distribution, 51.2 cents per share. We're going to look at how the share price of LFGY performed over the course of the week, and we're going to make a guesstimate of what we think next week's payment will be based on the options trading from last week, based on the share price change and the increase or decrease in share value. A reminder, I'm on X at ETF_Inspector1, where I let you know when videos are premiering. I do my shout outs, my thank yous to people who support the channel, like Sunita. Just did a buy me a coffee, or we call it buy me a share, since a share of Ulti's around the price of a share of coffee. And that's what I'm more known for, Ulti, but I got a handful of people that still like to get the updates on LFGY. So let's go ahead and start off by looking at how LFGY performed over the course of the last week. So they were doing well. Again, this is not a end up horrible day. This was Wednesday into Thursday is when the money for the distribution comes out of the share price. So we go from 36.92 to 30 closing one day and 35.34 opening the next day. But we do know that, what we just say, 50 some cents, 51.2 cents of that was the distribution. The rest of it, though, was the market moving down. But bigger picture, we had 2 straight weeks leading up to that were very nice, where LFGY moved up 11%, but it's actually still up 5.5% from that low a couple weeks ago. It'll be almost 3 weeks ago now. All right, we take a look at our chart. They made approximately 110 trades over the course of the past week, starting on the, for starters, they didn't make any trades on Monday the 22nd. And then the 23rd, just a few trades. The 24th, that'd be Wednesday, just a few trades. The 25th, we had a nice handful on Thursday, and the rest on Friday. Fridays are generally going to be the most trades because they got to close and roll everything to the next week if it hasn't already been rolled. So obviously, no trades on Monday results in $0 credit/debit on the options trading. On Tuesday, they made $296,000. Wednesday, they made $187,000. Thursday, they made $442,000, and Friday, they made $1.3 million. So they did very well trading this past week. I didn't mean to block everything out. All right, so they made $2,288,000 in options trading this last week. So they did great as far as that is concerned. If we divide that up by the outstanding shares, we actually need to update that. 5,450,000. So 5,450,000. And we uncover it, that would come up to 41.98, almost 42 cents per share. So that's nice, to basically make almost enough to pay out the distribution in the actual options trading. That's the goal. But when we don't make it, then they tell us to look at the IV. All right, so before we switch over to that, we might as well, since we talked about how the options trading went each day, let's take a look at how the share values, the prices, the values of the shares, underlying shares increased or decreased each day. Obviously, the market was moving down for the most part, so it dropped 123,000 on Monday, dropped another 3.6 million on Tuesday, recouped a good bit with $2.4 million to the positive Wednesday. Then we dropped 8.7 million on Thursday, with a finally increasing 241,000 on Friday. Overall, the share values decreased by almost 9.8 million on the week. When we look at our IV, so I've gone ahead and looked up the implied volatility of each of the underlying holdings. I don't want to say stocks because some of the things within this fund are other funds. And then I multiply that by the weight. So that is not the overall weight within the fund. It's just the weight compared to each of the other underlyings, because that's just the way I'm running my calculation here. It gets goofy otherwise because you've got negative weights in there with everything that we've sold and have to buy back. So just to apply BitMine in the appropriate percentage compared to BitDeer and so on, this is just the way I do it. It's really just to give us a rough idea anyway. So BitMine immersion is about 2.5% of the weight, and it decreased over the past week to 115.8% IV. That's still very high, especially for this fund. LFGY is not necessarily the high volatility funds the way Ulti or Salty are. This is specifically crypto. BitDeer was about 4.5% of the money, up over 98% IV. That's an increase. CleanSpark was an increase to just under 88% with 4.2% of the money. Coinbase up over 7% of the money. It decreased this last week to just under 55%. Core Scientific, a little over 75%, is an increase with almost 5% of the money. Circle Internet Group's got 2.6% of the money, and it decreased this past week to a little over 78%. ETHA, iShares Ethereum Trust ETF, a little over 4% of the money, increased the IV to 69.5%. Galaxy Digital, and even 85% IV and just about 4% of the money. That's an increase from last week. Another increase for GameStop, 51, almost 52% with 3.3% of the money. Robinhood, another increase. We got almost all increases over here. 6.8% of the money, 55.3% IV. HUD 8 Corp, 93.3% IV, is an increase with almost 6.5% of the money. iShares Bitcoin Trust ETF, 9+% of the money, our largest holding within the fund, and it did increase to 37.3% this past week, even though we don't sell options off of that. Mara Holdings has 74.6%, is an increase from last week. That's 5.5% of the money. Mercado Libre, almost 4%, was an increase to 33.2% IV. MicroStrategy, just under 6.7%, was an increase to 59.3% IV. NU Holdings increased on the implied volatility to 33.2% with just under 5% of the money. NVIDIA's got 2% of the money and increased 33.5%. Opera, 42.8%, is an increase with 4.3% of the money. PayPal, a little over 2.5% of the money, is an increase to 30.8%. Riot Platforms, 6+%, increase to almost 84% IV. And finally, Block, XYZ, 3.6% of the money. That's an increase to 40.6%. So out of the 21 underlyings, 18 of them increased and 3 decreased. So not bad at all. That's definitely going to help with our calculation. So last week, we were at a 60.96%. It increased this week, the weighted average, to 63.13. Now, we know that's not perfect because they tell us it's based off of every single option trade, everything they've taken into account. And so I'd have to look up not only the IV of each option, but I would need to have looked it up at the time of the trade. So this is just getting us close enough to help make a good guesstimate. So we're going to take that and multiply it by our closing price and then divide that out by 52 to come up with our IV estimate. All right, and that would come out to 42.84 cents. So they made just about 42 cents, so that'd be a perfect payout. The IV comes out that the IV, and that's not perfect, comes out to a little over 42 cents, but I don't know that I can go that low. They just paid 51.2 cents to us on Friday. They did great trading. The overall share price is still up pretty nice. I mean, we obviously gave some back this past week, but we're not doing bad at all. So I don't think they're going to want to drop almost 10 cents off. So I went kind of in the middle, and I'm giving them 48 cents on the payment. That will come out to be about a 70% annualized yield. So that's a little high. For a long time, they were paying about 65, but last week they paid like 75. So just since they did so well, I'm upping it, but I got to go lower than last week. So 48 cents per share is my guesstimate for this week. All right, next, I just want to take a look at the trading ranges. We're looking for these to work within to get the best outcome for us. So obviously, we own all the shares, so we want the stocks to go up. But the have your cake and eat it too scenario would be if they all go up, but don't go into the money on their sold calls. So we're going to talk about how far out of the money each of those is, since this is a covered call strategy. Most anything highlighted is a sold option that we already generated income with, but you got to buy to close those at the end. So if they end out of the money, they are very cheap to close, and if they end in the money, they become expensive. So we're going to talk about how far they are from the money. Bitmine Immersion's got calls expiring this Friday at 57.50. They're almost 14% out of the money. And then if it's not highlighted, then it's a purchased call, and that's you could look at it one of two ways. It is a spread that basically limits the amount you could have to pay to close out that option strategy, as opposed to if it ran up to 100, you wouldn't have to pay the difference of $42.50 because the purchase 66 would then increase right along with it. You just have to pay the difference between 66 and 57.50. So you can look at it that way as a limiting thing, or you can look at it as once the share price runs beyond 57.50, now you're not making any more increase in value on your shares, because for every penny it goes up on your shares, it goes more expensive to close out your options. So at least once it hits 66, now you're back to making money on your shares. So there's two different ways to look at that. But either way, I don't announce they're basically insurance policies. Either way you want to look at it. So I don't announce those percentages, but they're there for you if you want to look at them. BitDeer Technology, $17 and $18.50 calls sold for this week, 4.6 and 13.8% out of the money. CleanSpark, $14 calls sold are 8% out of the money. And when I say that, that means CleanSpark can go up about 8%. But if it stops there, then we have increased in our value as much as possible without ending up having to pay a bunch to close out the options. Coinbase, $3.35 is the strike price sold for Friday, 7% out of the money. Core Scientific sold 17.50s. They're 3.8% out of the money. Circle Internet Group, $1.40 is the strike price. As you see here, they just sold their calls. They did not purchase calls, so they don't have an insurance policy, but they are over 10% out of the money. iShares Ethereum Trust ETF, 34s sold, 11.6% out of the money. There's $2.5 million in First American Government obligation funds and another $15,000 in cash. So dry powder wise, it's $2.5 million. Galaxy Digital, We've got $32 calls sold 3.5% out of the money. GameStop, $27 calls sold are 2.2% out. Robinhood markets, 127s are 4.2% out of the money. Hut 8 Corp, $44 calls are almost 33%, 32.5% out of the money. That's huge. And to think that they still cost that much at the close on Friday almost makes me want to start selling options on Hut 8 Corp. And they're only like a 90 something percenter. They're not even over 100. So definitely can get some premium if you're looking for something to trade on Hut 8 Corp. iShares Bitcoin Trust ETF. They don't sell any options on them, so we just want that one to keep on going up. Mara Holdings, 16.13 is the closing price Friday. They've got 19.50 sold for this coming Friday. They're almost 21% out of the money. MBTX, they've updated this sold call spread. 265 is the sold call with the share price at 258. They're 2.6% out of the money. They also have purchased a put spread expiring the end of the year with 255 as the number we want to pay attention to. If it approaches that quickly or runs below it, these will become more valuable for us to close out and win that trade. Mercado Libre, 1% out of the money on those calls with a strike price of $2,495. That's real close. Strategy, 10% out of the money on those 340 calls sold. NU Holdings sold 16s. They're 1.3% out of the money. NVIDIA sold 177.50s. They're actually already in the money by 0.3%. You see the closing price this past Friday, 178.19. Opera, these are the only ones that are not sold for this Friday, other than that put spread we just talked about with MBTX. These are not this Friday, not next Friday, but the one after that, the 17th. They sold 20s. They're 6.2% out of the money. And then they also sold 21s, but there's only 20 contracts there. They're 11.5% out of the money. PayPal sold $68 calls. They're 1% out of the money. Riot Platforms have 18s and 1850s sold, 1.7 and 4.5% out of the money. And finally, Block, $77 calls sold are 4.5% out of the money. All right, there's $192 million in assets under management within LFGY. On Friday, people were buying into the fund, so the outstanding shares increased by 75,000 up to 5,450,000. That left our NAV at 35.25, so it's trading at about a 4-cent premium. Not that big of a deal. Like we said, they paid out this past Friday 51.2 cents per share. I have mine on drip, so I don't even really pay attention to it. I don't even end up looking at the payment or the money because it just goes back and buys more shares. I did average up all the calls that are sold, and on average, they're 7.5% out of the money. So that means if we have an up week, we're going to get to capture a good bit of that within our share price before we end up having to spend a bunch of money closing out options trades. So that's a nice position to be in. And really, that's everything I got for you. So appreciate you watching the video. The dad joke went in the Ulti Salty video, so that premiered before this one. So you can just go over there and watch that video, or if you're not interested in Ulti and Salty, you can still just click on it, and the joke is always right at the end. So just go to like the last minute or two, and you get to get a little chuckle. All right. Other than that, I hope you had a great weekend and have a nice rest of your Sunday, and I'll catch you in the next video.